So last week we spoke about a few different topics, Brad, and this week we're going to focus on psychology. Obviously, you've got a lot of knowledge and expertise in the mental game of trading, and I think that's one thing that people want to hear about is the importance of psychology in trading. So I've got a few questions that's very interesting, and I think it's going to be good for the audience to hear your take on it. Are you ready for it?
I'm ready, man.
Cool stuff, Brad. So the first question that we have is, what's the boldest mental risk you've ever taken in trading? And what did it teach you about confidence versus recklessness?
Okay, so it's a good question. It's about like it's hard to sort of frame up a little bit, but we had some critical moments where over the course of your trading career, you've probably got defining moments that really was a turning point. They talk about sliding doors.
Yeah.
I remember a time at Citibank London where we were trading. It was the biggest Forex trading team in the world. It was a crazy ego maniac driven sort of environment.
Yeah.
Huge. I had a situation where, being the only non-UK guy on the main desk, under a huge amount of pressure, they wanted to see you fail. They didn't want, especially from Australia, someone that was going to be beating the motherland, right?
Yeah.
So to speak. But we had a position. It was a massive day where I got caught on a position. Now, coming up to economic numbers, liquidity sort of drains out of the market. So if you've got a very massive position, you actually can't go and square that up without destroying yourself. So, if I'm sitting there short euro, and I think on this day I was about 500 million short euro, and I just missed the window to start trying to trim the position up before the data release came out.
Yeah.
So, and I was like, oh my God, now I'm in a real pickle, because if I go and buy now, it's going to drive the thing up against myself. So, it's like shooting yourself in the foot. It's terrible.
Yeah.
So mentally, I was sort of sitting there thinking, well, I've got to make a decision here. Do we trim the position? I was trying to buy some options to cover the risk. Too late for that as well. So going in with it with 3 minutes to go, I thought, well, there's only one way to go here, and that's actually sell more. Just sell more. I thought, well, I'm actually so screwed here that I might as well get completely screwed.
Yeah.
So I sold another couple hundred million, and it started falling rapidly, right? Because they think something's up.
Yeah.
So then I'm about 700 million short, and I'm thinking, well, that's it.
Yeah.
This is it. So the young guy next to me, he's like absolutely terrified. He's like, what are we doing here? I said, don't worry, I've got it under control.
Yeah.
And he's like, oh, okay, that's good. So I was pretty confident I had the right position, but with the economic numbers, if they don't come out weak, you're absolutely punished.
Yeah.
So what I did is walked over to the where we walk in, where you hang up your jackets, all that sort of stuff. So I walked over, grabbed my jacket, and I had it over my shoulder, and two of the guys, and there's about a minute before the data comes out, and everyone's really pumped. They said, "What are you doing?" I said, "No, it's all right. I'm okay. I'm just standing up."
Yeah.
And then I put my jacket on, right? Because I was in a position where it was so crazy that I had my jacket. If the data comes out strong, I'm walking out, not coming back.
Yeah.
So
Crazy.
and then so I put the jacket on, and I thought, well, this is it. And then sitting there, everyone's like, "What are you doing, man?" I started taking a couple of steps towards the door, thinking, I'm so hammered. The data comes out massively weak. I pick up like $3 million. I walk back to the chair, took my jacket off, and they're like, "What the fuck is going on?" I'm like, "No, nothing. It's all good here. All good." I was sort of confident in my skills, but the recklessness of that event really did shape my capital management from that point on. I thought, why would I put on one position that actually risks my whole trading career.
Yeah.
It was,
No,
it was
that's
crazy. It was crazy, but it was actually like there's two things, right? There's being confident, but then there's being reckless.
Yeah.
And this was a bit of a one sliding door moment where they both coalesced.
Yeah.
Where I went from normal to completely ridiculous.
Yeah.
You know, and I tell you what, for the amount of energy and mental risk that I was going through, I would have probably given back $2 million on that trade just to have some, because it took about, I seriously think that one moment took about a year out of my life. Because it was just like, can you imagine the flashing before your eyes? You're like, I'm good at this, but I've absolutely put my whole thing on edge here. A big situation where, and you know what? So from that time on, I was a bit more clinical with my timing of closing trades before economic numbers. I didn't put, I never put my career in one position, under risk under one position. So it was actually, it was a defining moment, and I was lucky enough to walk away with, you know, a big pile of cash. And it wasn't until like sometime later, we were out having drinks, and a couple of the senior guys were like, "So tell us, what the fuck were you doing?" And I'm like, well, I just wasn't sure how it was going to pan out. So I thought I'd go. I told him I was going to go get a coffee, but I was not coming back. Anyway, so that's one, man, and talking about it to this day still gives me shivers, because it was so crazy that I just couldn't believe, you know, how much control, you know, confidence I have in my execution and control that I got myself in that situation. So I can see how retail traders, you know what, you have a position and you think, oh, I'm just going to let it run over the numbers, or it's against the plan. Your body will tell you, you know, you're doing the wrong thing.
Brad, would you also say, like, the recklessness comes with overconfidence as well? Like,
it sort of does, Jacques. It does in a way. It's a fine line between confidence and like an egomaniac. Right? And that's what people always think of the traders in the dealing rooms. I think they're all egomaniacs. But the truth is, in this environment, you've got to be very confident in yourself. Now, that can go too far, and everyone thinks you're an absolute dick. But then I don't know. It sort of can. What it can do is overconfidence can, if you're not careful, can lead you into it becoming reckless very quickly, and then you've lost control, and then it's down to the trading gods whether you survive.
Because it can actually go both ways. Like, it can go overconfidence, where you think you're so good, you're in a winning position, and now you stack up, and things go south. And the same with the other side, you're in a losing position, and you hope for the best, and then you stack up there. Either way, it's still it's still reckless.
I think you're right. Like the recklessness, right? So it can come in. Yeah, you're right. You think, and this actually, I say this to most traders when they sign up for the program, right? They're like, okay, so how's this going to work? And all these sorts of things. But the thing is, when the biggest problem we have with traders is actually when they start trading and they start making money. Because all of a sudden their confidence goes through the roof, right? And then they think, you know, I'm invincible. Which and every trader we've had has a situation like the one I just described, where they're up, say, 20 or 30 grand, and they go, I'm really good at this. And then they get reckless, and then they drop that 20 or 30K, and that's their big lesson. Like I had in the markets. That is very common for all our traders, because once you do get confidence, it can flip into recklessness very quickly. And it's not until you get there that you realize, oh my God, this is reckless, completely different to being confident. So it's a fine line that most traders unfortunately have to go through that experience. Hopefully it's only a 5K loss, not like a 30 or 50K loss, which I've seen from a lot of our guys.
So the next question that I have is, was there ever a time when doing absolutely nothing was the most powerful psychological move you made in the market?
Oh yeah, well, like a lot. And from that moment too, so you become a little bit more clinical, right? You've got to have and this is where you get a bit more experience, is just being strong. So in the market, and also mentally strong, in the market yourself. Like when you're at the trading desk, you've got like 100 sales guys yelling out. They're managing after fund managers, corporates, all these sorts of things that want to clear the market. You've got to look at the market and be completely honest, right? Yeah. Sometimes the answer is you don't know what's going on, right? And that is actually quite frequent. Like people say, but you know what's going on in the market. Like I generally do, but sometimes if say something starts spiking up, and I can't see what it is, you've got to stand back and think. The answer is, and it's not embarrassing. I don't know what's going on. So what I became very clinical of, and a lot of traders didn't want to be seen in the dealing room as, if someone yells out, hey, what's going on? You turn around and go, I don't know. Right? That would sort of seem to be weak or embarrassing. I actually took it on as being completely honest and going, man, I'm at the coalface here. I can see everything that's going on, and I don't know what's happening. Right? And it's quite a freaking thing that actually everyone started to adopt at Citibank based off that, because what happened was in these situations where the market did kick off and we didn't know what was going on, I was sitting there going, steady, we're not doing anything. We're not doing anything. And the two junior guys that I had with me, sort of counting the positions and all these sorts of things, would be going, Are we on? I'm like, steady, we're not doing anything. And then, you know what? The whole team would get absolutely splattered, right? Because they've got all these positions, everything's going around volatile. Everyone loses like loads of money. I'm sitting there chilling with no losses.
Drinking your coffee.
Psychologically, and then, funnily enough, after once or twice of notice, the respect came. They're like, wow, that is the best thing to do, is do nothing.
It's powerful.
So,
it's a powerful move.
Mate, hugely powerful. And believe in yourself. If you know what's going on, you hit it. If you don't, stand back and just go, I don't know what's going on. If anything, that led me to be one of the best traders in that whole team, was because I didn't have the big losing days. I stood back. When everyone was losing, I didn't make any money, usually. You didn't lose any. So psychologically, doing nothing is massive.
Especially, I think also for like retail traders, there's a lot of guys with limited knowledge, and they can only make their decision, like their trading decision, based off of their limited knowledge. You need the knowledge to know exactly when to actually stay away. So it's very important to make sure you have the correct knowledge and the correct foundation to know what the market is saying.
100%. Like they don't have enough knowledge, plus 90% of them don't have enough resources. Like we subscribe to Metastock, it costs like $100 a month. That keeps you in the loop with everything that's going on. Right. So like most retail traders that are making these decisions, they have their trading platform and that's it, where they've just got numbers. They've got no news, they've got no fundamental economic numbers, and they are lambs to the slaughter, right? Because you might get, and the worst thing that can happen to those guys is actually have a couple of winning trades just because they've been lucky. Then they go back and all the money's gone.
That's right? Very true, Brad.
It is. It's a massive issue for new traders aspiring, loads of goals. They got like put some money into it, and they walk away with this very sad story.
Do you think traders are born with certain psychological traits, or can mental toughness be fully developed?
You've got to have. I think you are born with it, right? It's like sports people. So when I was, when I joined Citibank through the graduate recruitment program, I was actually taken in because I was a high performance athlete. I had an economics degree. I had a load of things, but the main thing they were looking for was the psychological traits of and this is why they took on people that were smart in high level sports at an international level predominantly, was because you just had discipline, you could work in a team environment, psychologically you wouldn't give up, and all these sort of key aspects, right? And you can't like just, we had guys that came in, and give you an example, many years later, after about 15 years, they started like a lot more kids were trying to get into trading.
Yeah.
So they started cherry picking the smartest kids. Now, these people were hugely academic with no sports background or anything.
Yeah.
They come into the dealing room and were terrified.
Yeah.
Right? Could not think, could not do anything because they had no psychological traits at all. Mental toughness, it comes with experience, right? And then what I talk about is life experience.
Yes.
If you've got no sort of if you've had no background of dealing with tough events or whether it's school, I went to boarding school for 6 years. We were trained to survive, and then not only that, you go into the sporting world and put that into that, then all of a sudden you realise that you've actually got a skill set here which is unique.
Yes.
But in saying that, there are, some people are determined, and you can actually teach a level of mental toughness that they need to develop. Will it get to that next level? You don't know, but I can tell you what, if you line people up in a line and you look at their characteristics, you take the person that played, was involved in elite sports in particular. It's an easy one because it covered every aspect of what you're doing. All you need is a risk appetite on top of that, and you've got a great. It's like a trained mercenary. You've already got those characteristics, and they just need to put you in the game and train you up.
Do you think also, like, obviously, when you go through mentorship, like your programs, you go through all of that, obviously you get the blueprint. So you get the blueprint. All you have to do is be disciplined with the actual steps that's given. So if you go outside of the frame, you're going to get your ass kicked. But if you stay within the blueprint, the risk is limited and you're going to make money. So would you say the mental toughness part of trading is actually when you don't know what's going on and trying to figure it out? Try to figure it out. Whereas if you actually get the mentorship and you get the blueprint, you don't need that mental toughness if you can follow rules. Would you say that's correct?
Yeah, 100%. The main, and what I'm talking about with this mental toughness and all these sorts of things, we're dealing in dealing rooms where you're dealing with other people, egomaniacs. You've got and decisions, lots of screaming and yelling. So what we did with the program is we made a specific trade plan and structure and process to take away that accommodates for that mental toughness that we had in the dealing rooms. So you don't need to be mentally tough now. With our plan and structure, you just need to be disciplined, as you said, right? So be disciplined, look at the plan, understand that you're not going to make money every trade, and when things line up, you put the trade on. It's that simple. So the whole structure of everything we did with that mentoring program and everything else is to keep you with your feet on the ground, thinking clinically. Don't worry about what you got to be is just think, I've just got to stick to the plan. That's your mental toughness now is I've got structure here, so I don't need to be, you've got to be your own best friend. Don't get me wrong, but you don't need to beat yourself up. But if you stick to the plan, then you won't have those issues at all.
It's already figured out for you.
It's already figured out. So your job, and I keep telling traders this, your job at the end of the day, when you've gone through the course, is just to find, identify the trading opportunity, put the trade on. The market will do the rest. The market will either deliver or it won't.
If every trader had to tattoo one psychological mantra on their arm to succeed, what should it say and why?
Always want to get some tats. Well, actually, I'll tell you what, there was one thing that stuck with me forever, and I can't even remember where I initially got it, but there's one thing that it sort of stuck with me, and I sort of taught it quite a lot. Luck is when preparation meets opportunity. That is, and people because when I was sort of trading at each bank, right, I had these big positions and this and that. I always made money, everyone was saying, "Geez, you're a lucky trader. You're lucky." You seem to be lucky. Like the positions go your way. It's this and that. And I'm like, Yeah, but at the end of the day, I was more prepared than everyone.
Yep.
I actually, and whether that's because I came out when I first started at Citibank, and especially in London, and probably more so London than New York.
Yeah.
Like a lot more of the guys in London were Barrow boys, right? They
Yeah.
were smart, good with numbers,
Yes.
no real academic knowledge at all. But
Yeah.
just goes to show you don't need it.
Yes.
But I had an economics degree behind me, and I was actually smarter
Yeah.
in reading the market. They actually, we had economic numbers coming out. We had a financial guy behind us,
Yeah.
and they would all look at him and go, "Do we buy or sell?"
Yeah.
Right? I'm like, "Are you guys shitting me? Like, you don't know."
Yeah.
So you got the edge there, right? So with that, so when luck is when preparation meets opportunity. I would prepare. I would understand what the numbers were, but this is well before most traders were thinking about it. What implication that had on the central bank, and where the forward interest rate market was moving, and that would move the interest rates, and the currencies would move with it. So you're like, if you're prepared, you can make better trading decisions
100%.
more consistently.
Yep.
That's more of it. So if I had to get a tap up here somewhere, I would be. Luck is when preparation meets opportunity. If you've done the prep, you're sitting there, something happens, you know exactly what to do.
Exactly.
And that's that, and they think you're lucky, but you're actually just smart.
Yep. Cool stuff, Brad. So the next question is, if you could measure a trader's mental state as easily as their P&L, what single metric would you track?
I'd say their win-loss ratio.
Cool.
Right, this is that tells you a lot about the trader, right? So whether they are a revenge trader, right? Which the person loses money, they go back into the market, they have about 10 losing trades, they might have a few winning trades, but you can tell by a person's win-loss ratio how astute they are mentally with their trade selection. So and it's not about just making lots of money on every trade. It's about having less losing trades and more winning trades.
Yes.
Because that is someone that is mentally astute. They are patient. There's, the fear doesn't come into it. They're very structured. So, and usually the market's moving in their direction, right? So you're doing less trades, but you are going to be a long-term successful trader. Person's win-loss ratio does a lot. And I've seen like a trader's performance, right? He might be up like 65%, but his win-loss ratio is negative. And what that tells me is he's putting huge amount of risk on one opportunity, having one-off winners when the majority of his trades are losing trades. Okay, that's a trader that has a time frame for their trading career. Right, that's a very short time frame, and it's only a matter of time before that one big trade where they get their money back blows up and they're out. So the first thing I would look at to check a person's mental state is check their win-loss ratio, and it does a lot. Usually, and then I could go into their performance and micromanage that, because you'll find a person that is mentally astute, okay, and balanced. They will not have a lot of drawdowns. They may have a losing trade, but they won't have 10 in a row. They'll have maybe 1 or 2, and then they're looking for that next winning trade. So that's the easiest metric to determine.
What would you say to people that's watching this now with the ridiculous P&L, and they just got a shock and they know, okay, damn, my P&L looks bad, my ratio looks bad. What would you tell them? What steps can they take to get that fixed?
Well, it's just a matter of getting more knowledge and understanding around what you're doing. Right, you can trade big and you can hit it out of the park. But if you don't know what you're doing, you're one trade away from losing. So just invest in yourself, invest a bit of time, be a bit more patient, trade when the markets are on, not just because it's your day off. You start to put these things together. So do it before it's too late. Because once you've done that one big trade and you have that big loss, your account is now almost unrecoverable. And what traders do then, they go, you know what, I'm just going to put the whole lot on now. Like they lose the plot. So do not get into that position where you are risking your wealth that you've worked hard to get, and you're throwing it away because you're being stupid, basically.
Yeah.
Right. So I would say for traders that don't know what they're doing, jump on our Get Started for Free courses, and there's some capital management in there. But if you go into the main programs, this is what we focus on. It's about giving you more knowledge and understanding about the technicals and fundamentals so you can pick the right trade. But most importantly, be able to apply better capital management so you can trade bigger without even jeopardizing anything. Right? That's the key to this. So if you're not doing that, I'm just telling you, you're on a timeline to failure. So get tuned up before it's too late. Yeah, that's usually important. I mean, capital management, trading psychology, the two biggest parts to
100%.
success.
Cool.
And it's the two biggest parts that most traders don't even consider.
100%.
All right, Jacques, appreciate that, mate. Have a good day.
Cool stuff, Brad. Cheers. Bye.